Hello everyone, and welcome to today's webinar from our new Move webinar series. We've got a great investment panel lined up for you today, and it's entitled Investment in Mobility, Will It Change? So the panel will be approximately an hour in length, roughly broken down 40 minutes of conversation and 20 minutes of Q&A towards the end. But the live Q&A is now open, so feel free to insert any questions you have there. Hopefully we'll be able to get through them all. But without any further ado, I'd like to hand over to Shannon.
Hi everyone, thanks for tuning in today. I'm from KX Ventures, which is a corporate venture arm. We look for early stage and growth stage companies that we can add value to through what we have, which is KX technology and the world's fastest time series database. At this point, I'd like to hand it over to the other panelists to introduce themselves, their fund, and maybe give us a bit of insight into their areas of focus. Dylan, do you want to go first?
Sure. Hi everyone, thanks for having me. I'm excited for the conversation. I work for Founders Factory in London. We are a corporate-backed venture studio where we build companies together from scratch, and early stage accelerator program and investing at the pre-seed and seed stage. We build sectors around corporate investors, and I do our investments for our travel sector in partnership with EasyJet, the airline, and within travel falls mobility. So anything to do with getting someone from place A to place B at the early stage is what we look to invest in.
Thanks, Dylan. Steve, do you want to go next?
Partner of Mobility Impact Partners. The Impact Partners is a collaborative strategic investment platform, which is a lot of words, but basically we bring together the sort of key stakeholders in the mobility ecosystem. Think auto OEMs and tier one suppliers, telecoms, electric utilities, oil and gas, finance and insurance, fleets, freight, logistics, all the different sectors that are greatly impacted by the transformation of the mobility sector, and in turn invest in emerging mobility technologies, products, services, and business models that are impacting all of our corporate partners. Our investment profile is kind of late venture and growth stage. So we're not early stage investors. We're mostly later stage investors because we're focused on scaling those businesses through partnerships with our corporate alliance.
Perfect. Thank you, Steve. Andreas, do you want to?
Yep, sure. I'm Andreas Strasser. I'm from the Volvo Tech Fund. We invest in everything that can help Volvo build better cars or be better at building cars in the future. We spread our investments mostly between Series A and B with ticket sizes from 1 to 5 million. And we are looking, basically at everything in mobility that can help us to compete and outcompete our competitors. So.
Perfect. Okay, thank you guys. Well, I guess the first question is, are you still looking at new deals? How has your investment process changed due to COVID-19? Steve, maybe you want to take that first?
Yeah, absolutely. This current situation in mobility is something that we very much anticipated anyway. It's part of that very typical hype cycle where mobility has been on a tremendous frothy upswing for the past many years, really for about a decade. Its comeuppance was long overdue, and it's part of a natural kind of weeding out and culling process, the Darwinian process that's been that way through every sector, whether it's the internet or clean energy or whatever, over the past many decades. So this is a perfectly natural process, and indeed probably represents some of the most opportunity-rich landscape that we'll see in the mobility sector perhaps ever again, because typically as you come out of this type of a process, the strong companies survive, and they become kind of the largest platforms going forward. So yeah, we're very positive on the current environment and the trajectory.
Yeah, I absolutely agree. So mobility has been on a tremendous growth curve over the past couple of years, and I think frothy is my favorite new word to describe the past couple of quarters. So what we see is basically that investments will continue, and I think the companies, especially the corporates that invest now in innovation, will emerge stronger when they partner with the right startups. So the whole strength also just refers to OEMs and not only to startups, I would say. And we are continuing to invest and are actively seeking investments right now. But of course, you now get approached by, at the moment, you get approached by a lot more companies who are desperate for money. So you need to become a little bit pickier and choosier. So it's becoming a sort of an investor market right now, as it maybe before was a more of a startup market.
I can speak for Founders Factory that across every sector, we're still actively looking to make investments, especially in travel and mobility. I think that the only things that have changed are the way we're viewing it, not the speed at which we're deploying capital. A metric that's become increasingly important for the early stage ventures is runway, just because other investors are not necessarily deploying capital as much as we are. So we're happy to invest in early stage companies with a high risk, but we just want to be sure that they have enough runway, at least until January 2021. Because there's uncertainty with other investors. And I think that, you know, as you both touched upon, it's less about for us deciding whether or not to continue to invest. It's just what are the new areas that COVID has created and the environment has created as opportunities in mobility. So we're just shifting it, broadening what we were looking at before to include new themes and new areas of opportunity.
Thanks for that, guys. Which segments of the mobility industry have been hit most in recent weeks, positive or negative?
I'm happy to jump in there.
Okay. Yep. Cool. Perfect.
Happy to jump in. So I think the important thing to understand about it's easy to get too wrapped up in COVID and its particular impact on what's going on, but within that framework of conversation, there's I think the most helpful way of thinking about the impact of COVID on various mobility opportunities is that there are certain vectors that were already in place where COVID is accelerating those vectors. And those are the ones that you want to focus on the most because they represent the greatest opportunities anyway, regardless of COVID. And COVID has simply provided additional accelerant, kind of added fuel to the flames. So things like, and one of the things that's obviously benefited tremendously from this stay-at-home orders and quarantining is e-commerce, edge logistics, that kind of massive transformation from brick and mortar retail, if you will, to online retail. That has tremendous implications for supply chains and for logistics, and for all of those particular opportunities. That's something that's being dramatically accelerated by what's going on. Similarly, telecommuting. No offense, Dylan, but EasyJet is not going to have an easy time getting out of this situation, right? But telecommuting, telemedicine, remote learning, anything remote, which actually obviously has a dampening effect on mobility, but we need to think in the new mobility world, we need to think about mobility, not just in terms of how we move in real space, but how we move in virtual space and how we relate to one another in virtual space. And all of the vectors that have been, like I said, telemedicine, telecommuting, remote learning, all of those things are being dramatically accelerated by COVID. urbanization and the ex-urban trend, I mean, these are kind of opposing vectors, but you have, for example, millennials that have been urbanizing, you have boomers who have been ex-urbanizing. Those trends are likely to be accelerated and will dramatically affect mobility. The general retreat from globalization, which personally, I mean, I was hoping was a blip, is actually to a large measure and kind of ironically accelerated by COVID. In other words, even though our response to COVID should be greater focus on global responses to things like pandemics, unfortunately, a lot of the response to what's happened with COVID is likely to be bringing home supply chains, being much more cautious about international dependencies in terms of supply chains. So these are vectors which were accelerating anyway, and COVID is going to accelerate those vectors even more. There are a few vectors that are dampened by COVID, but that are underlying, moving, progressing anyway, like shared economy, for example, ride sharing. I mean, Uber and Lyft are going to suffer in this situation because people are going to be concerned about getting into a car that somebody else was just in and that's being driven by somebody that they don't know. I get that. I think that's a speed bump. I think that's going to dampen the vector for the shared economy that was an underlying unstoppable vector anyway, and will continue to be an underlying unstoppable vector, but it's water on the flames rather than petrol on the flames. The other ones that I mentioned are petrol on the flames, and you can think about the underlying vectors very much in that context. And what you really want to focus on, I think, as an investor, is pay attention to the things where accelerant is being put on the flames of major underlying macro vectors anyway.
Mm-hmm.
Yeah, and I can add that I think when it comes down to early stage startups, we're looking at where your revenue is coming from. So if you are a straight to consumer company, the factors that we need to look at is what is consumer spend going to be looking like, in addition to the the health concerns of getting into a stranger's car, but also just what consumer spend could look like. And if you're a technology company trying to serve, whether it's an airline or an OEM or an automotive company, which budgets are you going after? Because we're seeing that, the first two budgets that get cut in a recession, in any environment of recession, whether it's as a result of COVID or something else, is advertising and innovation. So if it's a nice to have and not a need for the corporate, there's a risk that those budgets disappear. So just being really clear on what that revenue is coming from, and that in any sort of environment, it's still a need and a real problem that you're solving for your customers.
Yeah, I agree there. I'm not too concerned about short-term impacts of COVID. I mean, there will be a little bit of a dampening of effect on Uber and Lyft, but I guess that that will also bounce back as people just learn to live with that and at one point adapt. But the more immediate effect is basically really the consumer spend, and every restaurant that is closed today will have an effect on cars being bought in 2 or 3 years, because it's basically people that run that restaurants can't afford a car anymore, and that is going to be this cascading effect through the economy. That is going to affect a lot of things, and will probably shape the business environment far more than anything that happens now over the next 3 or 4 months, where people just shift behaviors for a short time. So in the long term, though, I also see that we will have to have answers for situations like that in the future. So we need, when we construct services or when we develop products, we need to keep in mind that something like that can happen again, hopefully not for another 100 years. So we seem to have sort of a 100-year cycle, but still people will expect that. And what the impact then is on really fully shared autonomous driving, for example, where you have this cabin going around 24 hours a day, probably not being cleaned properly in between, and so on. That's going to be interesting. So you need to keep that in mind when you develop a service or when you develop a product.
Okay, thanks guys. Where do you see the greatest opportunities coming out of the crisis, and how should OEMs respond? Have you shifted your own investment focus areas? Dylan, maybe we'll start off with you if that's okay.
Yeah, so sustainability has always been a huge priority for Founders Factory and for EasyJet in travel. And I don't think that just applies to the aviation industry. I think that applies to mobility. We've looked at a lot of companies in the electric vehicle space. We've looked at the sort of fast travel and how the short haul flights and other mediums of which people can move from A to B, which can still sort of be considered in your holiday experience. You don't have to you don't necessarily have to take the least environmentally efficient way to do this. So I think what COVID has showed us is there's both an environmentally important opportunity here, we can save our planet, but that there's a lot of new business models and a lot of new opportunity to explore ways to still enjoy moving physically from one place to another in a more sustainable way, and whether that means doing it less so, or focusing on technologies to allow us to do it in a more sustainable fashion. So, and I can talk about some of the startups specifically that we have invested in or are looking to invest in that are in the space, but I can say that it's definitely an area now that was a priority before that's become an even bigger priority for us as a result of taking a break, a step back from rapid movement and exploring how we can do it in a more sustainable fashion.
Perfect. Thanks, Dylan. Andreas?
Yeah, again, Dylan, I have to agree here. I think sustainability is also something that's really important to Volvo, and that is something where we look at also actively investing in this area and accelerating the transition to full electric mobility. And I guess that here actually there will be an impact of COVID, as a lot of OEMs globally are struggling right now. There will probably be some support packages coming from governments, but they usually come with strings attached. So what I would expect is that there will be an accelerated transition over to electric mobility. And there will also be a rethinking of city space. And I saw a couple of questions here on micromobility and congestion and other things. So as people move to more telecommuting, working from home, but also cities now have hit a reset button in terms of traffic, and have moved more towards very limited, at least here in Berlin, very limited car traffic and a lot more people cycling. So I guess there will be a discussion about how the space in the city is shared, and more encouragement of cycling, maybe other forms of transport rather than cars and public transport. So there's an opportunity there, but there will also probably be some fights over distribution.
Perfect. Steve, would you like to add to that?
Sure. The way that I would answer the question, Shannon, is not so much specifically related to COVID itself, but to just make the observation that if you look at mobility, and if you believe any of the analysis that's out there, whether it's JP Morgan or Morgan Stanley, McKinsey, or anybody, the vast majority of marginal value, in other words, increased value in this new mobility ecosystem that we're developing, is really outside the vehicle. In other words, 70 to 90% of that additional value is going to accrue not to the commodity vehicle itself. No offense, Andreas. Again, I feel like I'm dissing my other panelists, and I apologize. But most of the value is going to accrue to infrastructure, the infrastructure itself of mobility, the ecosystem, the applications that are value added for customers and so forth, rather than the vehicle. But if you look at the investment pattern over the past many years, 90% of the capital that's gone into mobility, and it's been a considerable amount, it's about $250 billion, has gone into the core automotive technology, the electric drivetrains and the autonomy technology, for example, to manipulate these vehicles, which is money well spent. Don't get me wrong; those are table stakes for the new ecosystem. But the reality is that in relative terms, the infrastructure where most of the value is being created has been dramatically underinvested. And that underinvestment has not been because folks like Andreas and Dylan are missing out on the opportunity. On the contrary, they're quite focused on it. But the problem is that emerging mobility ecosystem is extremely complicated. It actually exists at this complex intersection of electrification and telecommunications and payments and hardware that's inside the vehicle as well as outside the vehicle, to say nothing of the complex data structures, the software to govern all of these resources. And so our approach to this is that in order to really understand these multi-sectoral challenges and take advantage of these multi-sectoral opportunities, you need that kind of multi-sectoral insight to offer the vision that you need in order to make those decisions. And that's, if you will, the whole raison d'etre behind Mobility Impact Partners, is to kind of bring together that coalition of partners to provide that kind of 360-degree perspective on these emerging opportunities. That's where we think, and COVID is only, once again, added accelerant onto that process, has only made the opportunities there that much more manifest. That's where we're focusing our energy.
Perfect. Okay. Well, Steve, we've got a question from the audience for you, and it's quite interesting because I've heard a lot of talk within the industry over the last couple of weeks about affordable autonomy and affordable ADAS, and I actually think that's one of the segments that has been impacted most negatively by COVID. But the question for us is to build on what Steve was saying about changes in mobility. Will distance accelerate autonomous vehicles? So Steve, do you want to take that first?
Yes, there's no question it will. The ex-urban trend will undoubtedly, in fact, to some measure, autonomous driving is a sine qua non for the ex-urban trend. People will continue to move outside of cities, but the additional commuting time, first of all, there'll be more telecommuting. I think one of the beautiful, there's a couple of beautiful things, really positive things that come out of the COVID crisis. This is one of those, is the glass 95% empty or 5% full? But one of the really valuable things that's come out of the COVID crisis is that this type of interaction that we're having right now is the new normal. And you know what? It doesn't suck. It's not horrible, right? In other words, is this as useful to our audience as having to travel to some sort of conference venue, to pay for a hotel, to sit in a conference room, to hear the same thing basically, and then have to travel back and so forth? The overhead associated with all of that commuting is significant. It's even more so in terms of business travel. I don't think business travel is ever going to come back to the same level that it existed pre-COVID, because there's more acceptability. It's no longer necessary to get on an international flight to fly to Japan for one meeting just because you want to prove to somebody that it's important enough to be there in person. It's acceptable now to be there virtually and to have a conversation. And that's going to make us all vastly more efficient. We'll be commuting less. We'll be actually traveling a lot less for things that can be done in a more rational way virtually. But the ex-urban trend that has been happening before COVID, in other words, families are starting to move out and take advantage of telecommuting and so forth, working 3 days a week from home or whatever, has made it more possible for people to get further away from cities. The autonomy is a very positive feedback loop. The more autonomous driving becomes available, the more that commute becomes acceptable. The more that commute becomes acceptable, the more people will move out of urban areas to enjoy trees and grass and sunshine, and utilize autonomous vehicles to do their commuting. So there's absolutely a positive feedback loop there. By the way, I will. Sorry to interrupt.
Dylan, you go first.
That is where autonomy has the most compelling business case, however. But I do think that's definitely a trend that we'll see. Sorry.
Yeah, I'll let Andreas speak to the autonomous vehicles piece, because I think he's much more equipped and validated too. But one thing you said on the corporate travel piece, which you know, is very close to home with us. And, we've just invested in a company actually called Troop Travel, which is a data platform to help corporations plan, optimize for and plan their travel. So essentially, if you've got people coming from multiple places, meeting somewhere, how do you pick the place that will, the location that will be the cheapest, have the least environmental impact, you know, taking into all the different factors of where people are coming. But I think what they've also had a lot of success recently is by being able to also integrate the risk profile. And again, COVID is one example, but you know, there's lots of different risks associated with traveling. And there will be, unfortunately, it won't be 100 years before there's, you know, risk in certain regions, whether that's as a result of conflict or health or financial. But I think what this is going to do is, in the very least, is make people more conscious of their decisions. So not that they won't get on a plane to Japan for the sake of it, but hopefully making sure that that is the best and right decision for them to do so. And I think that it's not to say that that won't exist anymore. Telecommuting will definitely be a thing, but I think hopefully it'll just, and it will be more conscious and create more opportunity to allow us to be more sure of when we're actually doing that commuting. And it's the same thing with autonomous vehicles, where at least on our end, we're seeing autonomous everything. I think now we can be a little bit more conscious of what and when we want to actually implement these things. And it's adding an extra layer of human intervention here, think before we act, on whether telecommuting is right, or maybe it still is right to get on a plane for that meeting, and just having opportunities, technologies that enable us to make better decisions.
Okay, I'm not speaking to travel. Maybe not more than saying that I enjoy travel, the occasional travel sometimes. So I hope that continues, and I hope that EasyJet is still around, because Berlin is a major hub. And it has become, without plugging anyone, it has become one of my favorite airlines, honestly. But speaking to the autonomous cars, I think, yes, people are moving more outside of cities, and as they become older and as they enjoy more green spaces, or when you have a family. But at the same time, when we look at families and when we talk to customers, actually time spent in a car is more enjoyable when people drive themselves, and when they can drive fast, and it's not enjoyable on your commute. So when you have, people are not likely to increase their commute time, at least based on the data that we have, just because autonomous vehicles are available. What I think here is that people will choose to drive less overall, and maybe do more telecommuting. And that could accelerate the movement outside of the city. So, and I think autonomous vehicles basically have the most promise really in inner cities or in congested areas, where we take over the driving tasks that are boring and that people do not enjoy. So high density, low speed, and people really still probably will want to enjoy driving themselves occasionally on the Autobahn. So I don't know, Steve, if you had the experience, so it's quite enjoyable.
I'm a big fan of your product. I'm a big fan of Dylan's product, so don't get me wrong.
No offense here, no.
But
I just want to point out, we are a separate entity from EasyJet. They're our investors, but we're not I don't work for EasyJet. I work for Founders Factory.
I get that. I will say, coming back to my earlier kind of like Easter egg remark, I don't think that passenger in autonomy, the robo taxis get all the attention, and that's what everybody's focused on, is that kind of Jetsons future, when we'll just jump into robo taxis and go anywhere we want. I don't think autonomy is going to happen that way. I think there's much lower hanging fruit, much more compelling business cases for autonomy that are not in the passenger segment. Mostly for distributing cargo logistics. Certainly in geofence, you can start with geofenced areas. You can start with lead drivers and convoys. There's so much you can do in autonomy, where we can get much more information on the technology and its robustness, where you have extremely compelling business cases where you're dramatically reducing costs while at the same time improving performance, without having to worry about moving people autonomously in passenger vehicles. That in my view is the way that autonomy will roll out. We'll get to all of us. You guys are younger than I am. All of you guys will enjoy a world with autonomous driving. Don't worry, okay? Even I will. I'm quite confident, but I'm not convinced that's the early stage business cases that we should be focused on.
Yeah, and I think you're correct. And I'll plug two of our investments. One called Kara Curry, which is autonomous robots in kitchens, and another Zoa Robotics. And I think especially EasyJet is very interested in autonomous machinery to help luggage move within an airport. That's a very big inefficiency and a big labor cost within airports. And I think that those are the wins right now. Those are the investments. And I think it's especially removing the touch points with humans to bring COVID back into this is a safety thing. The less people touching things, fortunately, the better. So I think that right now, you guys are much better equipped to speak to when we'll get autonomous vehicles on the road, but we're looking at all the other areas that we can invest in automation now, the easy wins.
Classic geofence business case.
Perfect. Great. Thanks, guys. Okay. Well, if COVID-19 causes personal and business travel to decrease over the next few years, what impact do you think that decrease will have on consumer expectations?
Yeah, I'll change it up a little bit here to answer your question. I think that what we're seeing is one of you guys said that this environment has taken the power out of the startups and put it in the investors. And I think that that COVID has taken the power a little bit away from the travel companies and put it back into the traveler. And I think as travel companies and mobility companies are trying to get people to start moving again, whether that be for personal reasons or business reasons, there's going to be a much bigger emphasis on the experience and hygiene and cost and price and motivation. So I think that what we're going to see now is a bigger emphasis on improving the experience outside of just getting from A to B. So whether that is your experience within the airport or your experience within a city or on public transportation, I don't foresee a world in the foreseeable future where I'm going to be squashed on the tube in London for 45 minutes with 17 people breathing on my neck. I think we're going to really see an investment in how do we make that experience more enjoyable and safer to get people doing it again, because there's a behavior shift that even when there's a vaccine, there's a behavioral impact here and a psychological impact that I think travel and mobility companies are going to have to be combating.
I think that intercity travel will see an increase in car usage. So people now, for the foreseeable future, or at least a year or two until we have a vaccine and everything else, will prefer to travel in their own car rather than getting on a plane for shorter hops or for on a train. On the other hand, what the impact that OEMs, and then by extension all the companies that supply to OEMs or work with OEMs, will feel is whenever you have a reduction in income and a reduction in miles traveled, you will have a reduction in car sales. And there will be, and you see that from a lot of OEMs, there will be reductions in workforces, which means that there are fewer people available to work with your innovations, and there will be a slash in budget. So that's will affect us. So.
Yeah, these guys know the answer to that question a whole lot better than I do. The only thing that I would add, Shannon, is that it's complicated to mistake short and medium term impacts or behavioral modifications for long-term trends. I don't think this is a long-term thing. As soon as let's say there's a vaccine that magically appears tomorrow, I think that people will forget about this relatively quickly and go back to normal patterns of behavior. However, there isn't going to be a vaccine tomorrow. People will not go back to their normal patterns of behavior for quite some time. And so the important thing is not how do you adjust your long-term vision of businesses like Uber and Lyft, for example, to COVID, because ultimately I don't think it's going to make a difference long-term. The thing that's important is what are going to be the short-term and potentially medium-term. By medium, I mean, 6 to 18 months. What are potentially the short and medium-term impacts to incumbent players that might literally not be able to survive this problem? So, today Neiman Marcus filed for bankruptcy. That's just the beginning. I mean, brick and mortar is kind of one of those declining trends that was now had fuel poured on it by COVID. But I think EasyJet is a wonderful company, and I hope they survive this process. But goodness knows this is going to be really difficult. I don't know how much equity they've got on their balance sheet, and et cetera, right? The implications are really dramatic. I think Volvo is a wonderful company. How long? What is going to be the short and medium term impacts for these incumbent players that have structured their balance sheets for a completely different world? Okay. Long term, I don't think it's going to change the fact that we're going to get in airplanes to travel places. I don't think it's going to get in the way of people buying automobiles and so forth. But short and medium term, this could lead to some tremendous restructuring throughout the economy.
This is going to be extremely disruptive, and as for startups, where runway is king. That's runway is exactly the same at the moment for established corporates. So you need to secure your runway, and you can see it with OEMs already. And we are actually quite good at it, because otherwise we wouldn't have survived the 100 years in the past. So every OEM is reducing or slashing spending, reducing the workforce, and looking into ways to survive this. We have gone through 2008. This could be worse. But then after that, hopefully there's also a huge pent-up demand that will fuel the next acceleration for us.
Yeah, I hope so.
And just on I don't work for EasyJet, but I will defend them a little bit. I can't speak to their balance sheet more than anything you guys can read online. But I do think, as an airline that only flies within Europe, I do think that intra-European travel will resume, and domestic aviation travel will resume before international travel. So I think they're in a better position to start getting planes up in the air ahead of a company that might be reliant on flying between Heathrow and Dubai and Heathrow and New York. These are flights that are going to be more essential. People are still moving within Europe. They're cheaper to operate. So in the very least, they can start generating revenue again sooner than maybe international airlines, if we're looking at domestic travel and intra-European travel at least coming back before international travel.
But I do think it's worth emphasizing Andreas's point, by the way. If there are any startups that are listening to this presentation, I think the message should be relatively clear that it's much harder to sell to our community, to the investor community, business strategies that have forever negative cash flow impact for 5-10 years, because lose $1 a widget but make it up on volume. That business strategy people have been emulating. I mean, Jeff Bezos became the richest man in the world off of that business strategy. Mark Zuckerberg became one of the richest men in the world off of that business strategy. Say nothing of Uber and Lyft and so forth. The number of examples that the aspirational kind of mentors or the people that entrepreneurs have to look at are these folks that have just burned through billions and billions and billions of dollars in building their businesses. I think that's going to be very, very difficult today. And as with EasyJet and Volvo, the runway, the financial stability to be able to get through this crisis is going to be extremely important. When we're looking at our portfolio companies, we're looking at runway, man. We're looking at how quickly, what is the minimum amount of capital that you need to become operationally cash flow positive. And I can assure you that anybody that comes with a business plan to MIP is going to be asked that question. So if you want to prepare yourself for that meeting, make sure you have a really good answer to that question.
I think it's okay to spend money, and I mean it's expected for a startup to lose money. But what's becoming less okay is probably just to outspend your competitors in marketing and other things in order to grab the market share in hopes of becoming successful. So I'm looking at companies at the moment that are basically profitable, but could just use a boost to fund further growth and then really accelerate. And that is a business model that is very easy, or that is an investment is very easy for me now to propose to our investment committee, where I say, look at this, they have proven something, they need to make the next step, but inherently this business already works. So
and I think you're both right, and it comes to the narrative of fundraising. So we have a company that we've just invested in. It's a 2-person company that uses AI to help with engine inspection, which could be used for Volvo or for Airbus or for EasyJet. And it's just 2, brilliant PhDs. They need to fundraise, not because they're not cash flow positive. They are very cash flow positive. They can't deal with the inbound demand. So that is a strong narrative to go out to fundraise with, to say, we need your investment to hire people to fulfill our orders, as opposed to a consumer proposition that says we need to fundraise to spend X amount of money on Facebook marketing or TikTok or Instagram or even sales teams. And I think that narrative is not going to be as compelling in this environment. But the narrative of, no, we actually have built a product that people want, we just can't deliver this right now, and that's why we need to fundraise, should, in the very least, should be your starting point when you're going out to other investors.
I completely agree with both of you guys. Yeah.
Perfect. Okay. Thanks, guys. Which segments of the mobility market will see more investments? Is it ADAS, EV, connected tech, or battery tech? Or even new business models? That's a question from the audience.
I think that's for the automotive guy in the room.
Yeah.
That's a tricky one. So we have seen tremendous growth in AD investments over the past couple of years, and I would venture that is actually hard to sustain going forward, because we have a lot of the sensors already that we will need, and now we are moving more into an implementation phase there. What we would be looking at is, at the moment, basically more things like battery tech, improving efficiency and improving the cost model for our batteries, to make sure that that is working. Connected tech, everything connected at the moment can be implemented relatively quickly. So you're looking at a fairly short cycle time to get it into production. That is also something that will attract investment. And then mobility investments overall, I think a lot of OEMs will retract there or withdraw a little bit and wait for this to be over. You can see it with announcements that car sharing companies or operations are being shut down or scaled down or postponed and other things. I think mobility in general, from an OEM perspective, will have the hardest time to raise funds.
I'd love to hear what you guys think on this note, because what EasyJet has, unofficially expressed interest in is hydrogen as opposed to electric, and how that is looking in the OEM vehicle space.
Path dependency. That's the problem. We are investing heavily. Everyone is investing heavily in battery-based electric mobility. A lot of hydrogen projects have, some of the hydrogen projects have been stopped or postponed. We will have an infrastructure that is built around batteries. So my expectation is that even though maybe that this is not the better technology, and we could use it, that we will end up with batteries. So.
Yeah, super complicated question, way beyond the scope of the time that we have available. But I'd say the short answer from our part is, We look at this by building working groups around these topics. We have a working group on alternative propulsion technologies, and we want to really get to the bottom of the entire life cycle and the entire value chain associated with hydrogen, or batteries for that matter. But the very, very short answer I would give is that electric transportation is kind of inversely proportional to the payload to total system weight ratio. So in other words, in a passenger vehicle where the payload is very small and the system weight in relative terms is very large, then electric works extremely well. In heavy vehicles like 18-wheelers, where you have a large payload in relative terms, a large payload to total system weight, electric is not necessarily the best answer. But by the way, that does not imply that hydrogen is a better answer than diesel. And so in our view, if you're going to make the case for fuel cells or hydrogen or whatever, you have to beat the incumbent, and you have to beat the incumbent decisively. The incumbent is, gasoline and diesel on the passenger vehicles and diesel on heavy vehicles. I think electric beats the incumbent and beats it decisively in the segment where you have a low payload to total system weight ratio. I do not believe it beats it decisively in the high payload to system weight ratio category, but I'm not sure that hydrogen does either.
Okay, thanks guys. I'm going to take another question from the audience. Do you guys look at investments in developing countries? For example, electric vehicles in India?
I'll take that very quickly. Yes, the answer is yes. Our view of mobility is that it's absolutely a global challenge. There's an enormous amount of innovation happening in North America. Let's make no mistake, but there's an enormous amount happening in Europe, and there's an enormous amount of leadership and innovation in Asia and Asia more broadly. So our partnership coalition is global, and our approach to investment opportunities is similarly global.
Generally, yes. Practically, as a premium OEM, we have a hard time with most investments in developing countries. So we are happy to look at them, but at the moment, we haven't invested in developing country yet.
Yeah, we have an office in Johannesburg, which does pan-African investments. For the word, more of an emerging opportunity. And we actually are actively looking at expanding into India as well. It would obviously be a little bit different with different partners in different sectors, but we think there's a lot of opportunity in emerging regions. And from London, we've even invested in an Indian company called Envopap before, which is like a circular economy company making sustainable packaging. So if the opportunity is right, we don't really care where you're based. It's just obviously got to fit the value that we can provide, and understanding what's unique about the technology, not really about where it's from.
Perfect. Okay. Will large players still work with early stage startups in terms of pilot projects or investment, or are they stopped due to COVID-19? And that question is from Jacob. Thank you.
They aren't stopped. They become harder to come by, and it's harder to convince stakeholders to take on additional workload. At the moment, Volvo, as every other OEM, is working reduced hours, so we only work 60%, which means for R&D they are only there from Tuesday to Thursday, but still have to deliver basically the same amount of work, which means that a lot of vanity projects, or not vanity projects, but a lot of innovation projects fall by the wayside. That is something that we are cognizant when we make our investment decisions. Yeah, so it hasn't stopped. It has become significantly harder. So
yeah, I think it comes back to what I said earlier, is what type of budgets are you going after? If the company that we invested in that's doing engine inspection, I mean, they're solving a real problem, so they're saving cost from the pilot immediately, so it's an easier sell. if this is an innovation thing, like should we try out the application of virtual reality, or should we look at this? Unfortunately, sustainability sometimes falls in innovation. Should we look at this new sustainable product line? I think that stuff's going to be cut. So it more than ever needs to be clear that essentially from your pilot you're creating value, or at least it's a cheap enough pilot that gives you time to show the value that you're creating. And in terms of corporates investing, I mean, we work with a lot of corporate venture capital funds, and generally speaking, from my experience, and even Andre can be a testament to this, that the corporate venture arms tend to invest in later stage companies. So I don't know how many corporate venture arms directly invest at the pre-seed seed stage. So you'd sort of need to show your value a little bit, probably commercially first, before they would look at a direct investment.
Yeah. Yes.
I can add very quickly to that. Our whole business model is built on bringing together our corporate partners to identify common challenges, find solutions to those challenges, invest in those solutions, and then drive those innovations back into the operating businesses of our partners. And that hasn't changed. It's become, I think, even the sort of collaborative approach that we take to this, where we kind of leverage off of everybody's capabilities and expertise, is probably more valuable in a resource constrained environment. So, there's a lot of support for what we're trying to do, but no, nothing. Innovation is a key part of every one of our partners' growth strategy.
I think that's right, Steve. I think during this time, startups just need to be very clear on articulating what the ROI is of their product or service. But to finish this up, the last question is, what's the best pivot or new service you've seen a mobility company launch in recent weeks to assist with COVID-19?
I'll take this one because I can plug a couple of our startups. So one of our companies is called Car in a Way. It is a peer-to-peer car sharing startup. The concept being, you go on vacation, you would go to an airport, you would leave your car there for 2 weeks. Someone who lands in that airport could rent it when they arrive. So it lets you generate revenue off of a car that you're not using. They have launched a new version of this where you can rent your car for free to frontline workers in the UK, or give it to help frontline workers get to and from work. And they've done this in a couple of British cities already. And we think it's really important. They're not generating revenue on this. It's just helping people donate their cars to help frontline workers get to and from work. The company that I mentioned, Anomalous AI, which is working on the engine inspection, is part of the UK Ventilator Consortium. So they've trained their model over one weekend to do detection of ventilator pieces. So when they're building ventilator parts on your phone, you can use their camera app to detect if the ventilator parts are broken. And one other one is a company called Charged Up, which does portable hardware charging devices that you would rent at a restaurant or an airport. When you're there, you'd rent it to plug your phone in. They've got thousands and thousands of these chargers all across Europe, and they've turned their manufacturing plants from developing these portable chargers into developing cleaning stations, to get cleaning stations out into workplaces or public spaces now. So those are just three that I'll plug.
Two things to that one. First, pivots, yes, okay, but don't force this onto your product or onto your service. I have seen too many things where, already too many things where people come, okay, now we have a solution for COVID. That will be, until we have implemented the whole thing, it will be over anyway. But I have seen some interesting things, first from UVI, which is one of our portfolio companies. They do inspection of cars as they enter a facility, or in our case, as they exit a factory. And they have added basically thermal scans so that you can see whether the driver has a fever or not. This is a very, very simple and very easy application, or addition to the application. So they ensure safety of corporates or campuses or harbors or whatever you want to protect. Another one that's not an investment, but a company that I have spoken with for a long time, and hopefully we will invest one day, is Circular. They do cobalt tracing through the supply chain, but their solution is set up so that they can trace basically anything. And they have now looked into, okay, can we verify PPE, can we verify medical supplies and other things that come through the supply chain, as their solution is extremely flexible, allows you to track it along several steps and other things. And I find that a convincing implement or expansion of the product, not necessarily a pivot, but just an expansion. Steve.
I think it's tricky for a lot of mobility companies, and I agree with Andreas. I'm not a big fan of pivots as a general statement. Some of the stuff that I've seen is sort of marginally on the mobility horizon. There's a company that I'm familiar with that actually has developed a coating that's FDA approved for surfaces that actually kills bacteria and viruses over an extended period of time. So for cleansing subway stations, cleansing hospitals, cleansing even workspaces and so forth, this is obvious. This is a company that was struggling to raise a couple of $1 million 12 months ago and is now, you tell me, right? And then another company that I think is really interesting is kind of leveraging off of this whole telecommuting and telephony experience, but actually creating a platform for social experiences. So this is something that I think has been very poorly explored, and this medium that we're using right now is great for this type of a broadcast, but it's very, very difficult to get any real value in a kind of many-to-many kind of interaction, the kind of random social interaction that we have. And I've seen one company that's bringing together all of the kind of really sophisticated tech like machine learning and artificial intelligence, natural language processing and so forth, to actually create a social experience platform that that could be really exciting, that's launching in the next couple of months. So that's the type of opportunity which this environment will certainly encourage.
Great. I mean, one of our portfolio companies, Sipabyte, which is actually a Founders Factory company as well, done. Their Connect platform provides passengers with real-time updates on their journey, and they're actually at Downing Street pitching that today and how that can help with COVID-19. Well, thanks guys for joining the panel today. I hope that was insightful, and thanks for spending an hour with us.
Thank you.
Thank you.
Thanks guys.
Thanks, Shannon.
Bye.